kind of all over the place with which stocks they're watching. And there's a belief that they have to find some stocks that nobody's ever heard of. And I got a secret for you. Most professional traders trade the same stocks almost every day. If I had to give it a percentage, and let's say 100% of which stocks are traded, I would say probably 80%, a full 80% of the stocks that they buy and sell every day are the same stocks. Every trader that I know, including myself, has what's known as a universe of stocks, and you're constantly adding and subtracting stocks. And I'll tell you exactly how that happens, why you would add a stock, why you would take out a stock that you might be looking to buy, and more importantly, how that relates to the stock market if you follow this plan and if you develop the skills of how to trade. The stock market can be your own personal ATM, and we kind of joke around in our community that when a stock is trading really, really well, it's kind of like a broken ATM, and somebody makes a winning trade in that stock, and then like, I'm going to go look for something else. I'm like, why? The ATM is broken. Stay there. That's what we're going to talk about today. I have 5 tech stocks. You might call them growth stocks. I call them tech stocks that I'm going to break down. We're going to do a little bit of top-down analysis. We're going to take a look at the market, the ETFs that I look at for those tech stocks, and then we're going to break those tech stocks down to the 5. And 3 out of the 5, they trade differently, which I think is going to be an exciting thing to discuss today, because not all stocks trade the same. You need to know the personalities of how they trade, and then the position sizing into those trades and the potential rewards based on how they trade are actually different. One of them, you're going to be going for a little bit more share size on your initial entry because of the liquidity, plenty of liquidity. Other ones, they move around a little bit too much, not too much. They probably move a little bit faster than you might be accustomed to, and you might not want to have full share size on those. And we're not even necessarily talking about day trading stocks or swing trading stocks. We're just talking about trading stocks in general and building that list of stocks that are going to be your personal ATM every day. Now, again, educational purposes here, nothing we can say is going to be a guarantee of anything. I'm just going to walk you through what professional traders do. And again, it doesn't matter if you're quitting your job, staying at your job. What I'm really leaning more towards now is showing you top traders get to know their stocks, which gives them a familiarity with them, and that allows them to trade them a little bit more aggressively because they have confidence, because they know what the stocks do on a normal basis. And I'm going to show you that in a lot of detail. So we got a lot to talk about. So stick around. Be back in just 1 second. Okay, so thank you so much for joining me on the live stream today. I really appreciate it. If you happen to be watching the video later, obviously anybody who's on the call live right now can ask questions while we're here. If you have any questions later, please leave them below. So what I want to talk about first, I want to jump into the actual 5 tech stocks that I trade pretty much every day. Definitely every week, but pretty much every day. Now, that's a lot. I'm literally telling you which stocks I'm involved with on a regular basis. It really comes down to, again, if you're a regular viewer of the channel, you know that we talk about the optimal entry. Everything starts with order flow, which is it obvious? Are those stocks obvious? Then tape reading, which is it still valid? And how do I know if that order flow has changed? Now we're going to get to the last part, which is the optimal entry. So if you have a basket of stocks that you trade on a regular basis, and again, today we're going to talk about tech stocks. You could call them growth stocks, whatever language you're comfortable with. I'm obviously 100% okay with that. But what we do want to talk about is which stocks I trade every day. And again, this is not, I might trade them, I might look at them. I'm trading them every single day. Let me say that every single week, sometimes every single day. So first, we're going to talk about why these stocks, which I think is very important. And then we're going to talk about which stocks. So first, I want to just take a quick look at at where we are with why. So everybody knows this is the research document that we put out every day, right? Then we break the research document down a little bit deeper into which stocks we're looking at, but more importantly, stocks in play. And what we are looking at here are the larger cap stocks that make up the Dow, the NASDAQ, and the S&P. Now, I just want to say this super clear. Whether you bought William O'Neill's book, How to Make Money in Stocks, or Reminiscences of a Stock Operator, a classic stock trading book that everybody should know. If you're in the markets at all, you have to read Reminiscences of a Stock Operator, right? Every single person that I have traded with and every single person that has been a classic investor or a classic trader says you need to know the market, and then you want to follow the smart money into the groups that are following the market. It's just the smartest way to be involved in stocks. If the market's obvious and you find a group of stocks that are obvious, perfect. Then you have the perfect conditions. And actually, we've got a question on our Order Flow Pro coaching call tonight about what happens if you don't have all of that on your side, but the stock itself is still pretty good. And we actually break that down. If you remember, let me see if I can find that. We talk about the stock market power pyramid. Let me just bring this into the image right now. Hopefully you can see that. We pull that up. So when we're talking about the power pyramid, what we're going to be focusing on mostly today is here. We're not going to go up to the stock specific. We're not going to go into industry specific, although maybe we will. But we're talking about right here. So in this particular conversation, if the market is performing perfectly, that's awesome. But we're going to lean a little bit more right now into this, into the sector themselves. And we're going to specifically tech sector. So there's 5 stocks I want to talk about. I want to give you the 5 stocks first, and then we're going to work our way over into, I'm sorry, we got these idiots on, people have nothing to do in the morning and then spam comments. I don't understand it. I don't get it. Get a life, dude. I don't know what else to say. So here's the stocks. We're first going to talk about the stocks, okay? The top 2 stocks that are in my watch list every day. First one is Apple, and the second one is AMD. So what I want to talk about in these 2 stocks, Apple stock and AMD stock, the 2 things about these stocks. Now, one of the biggest things that we look for, and I'm going to give you the criteria first. I'm actually going to go over to a different software. Let me pull that up now because this is very important. If we go over to the software and we take a look at FinViz, right? Everybody knows how to use FinViz. Everybody watches this. I want to walk you through what I have as my minimum criteria. So you can see it's my template, right? 249 stocks meet this criteria on the template right now. And my minimum criteria, I'm not looking at any ETFs, so I'm just looking at stocks. Let me actually zoom this in a little bit for you here. So I'm only looking at stocks. I'm only looking at stocks over $15. I'm only looking at stocks that are an average true range of $1.50, and I'll get into these in just a second, and average volume of 2 million. So what I want to get across here is everybody who's in the market should be concerned about 2 things: managing risk and profit potential. Everything else is kind of like a side part of trading. If you could manage the downside and then be involved in stocks that have sufficient opportunity to make money, you kind of have the perfect business model where you understand your risks and you feel like you have control over those risks. But at the same time, those stocks or that opportunity moves enough in order for you to make some money, which is how I came up with over the last 23 years of those 2 criteria. So I'm just going to repeat it for you. I'll put it up on the screen here for you one more time. Okay. Average true range. And you can see what average true range is here of $1.50, minimum $1.50. It could be much higher, and average volume of 2 million. So that's giving me that combination of liquidity, which is managing my downside. Liquidity also means everyday institutional attention. And then average true range is the opportunity. Now, I want to just bring something up that it was a mistake that I made way back when I first started trading, which is I was trading these stocks that really didn't move that much because I felt like I was managing my downside while I was still learning how to trade. And to a degree, that's actually okay. But the reason we're trading is we want to make money. So if the average true range or the daily movement of those stocks are too small, it can be, you're also limiting your upside. So as you grow as a trader, and this is a big deal, as you grow as a trader, you might choose not to do this, but most traders do. As you grow, you learn how to handle more volatility, which will increase the amount that you could make on individual trades, on individual deals, right? So what's interesting is we just talked about Apple and AMD. So AMD, you can see, is hovering right around 100, and you could see Apple. Now, when AMD, just to give you an example, AMD averages roughly 100 million shares per day. That's a lot. That's a lot of shares. So that means it has a lot of liquidity. Now, when it has that much liquidity on a normal day, not necessarily day of earnings or, big kind of news story or something like that, that means that the stock has a lot of liquidity. It's going to take a lot for that stock to move. But when it moves, it catches momentum. The algorithms get it, and the stock market algorithms get it and takes off. It's a glorious stock to trade. But the challenges with trading AMD stock or Apple stock is they tend to do this before they actually take off. And a little bit more on the day trading side of things, the swing trading side of things, they move a little bit differently. But when they're doing this, they'll go up 20 cents, down 20 cents, up 20 cents, down 20 cents, and kind of dance around and then finally take off. But because you know there's plenty of liquidity there, you can actually trade a little bit more share size on your initial entry because of that liquidity. But here's the thing, because I'm trading those stocks pretty much every day, I know how they trade. So what happens is, and I'll just give you an example, and we're actually going to go to the shorter time frame chart. So let's actually use AMD here as an example. You can see that the stock moves back and forth, back and forth, back and forth before it moves, and you can kind of get chopped around in that stock. So what ends up happening is, as you learn the stock and you know how it's trading every single day because you're involved with it every day, you know that that dance is going to happen before the stock moves. So you have a lot of liquidity. You know that the stock is going to dance around before it eventually makes the move that you planned. Now, why is that so important? Well, a lot of traders like to really minimize their risk and they kind of trade it to the exact candle. And that's tough to do because the odds of you getting stopped out when you know that's how it's going to trade are pretty good. So you're probably going to get kicked out of the trade and then it's going to do exactly what you thought. So what I'm trying to get across to you here today, I want you to learn in a really, really big way. Let's really make sure that you get the main point in today's video. It is easier, not foolproof, it is easier to make money in the stock market when you're buying and selling stocks if you know the stocks well. And generally speaking, most professional traders, most people that take money out of the stock market on a regular basis tend to trade the same stocks over and over and over again. So again, I can give you a little bit of a snapshot into some of the ideas that I look at. So you can see over here, I have this list called Universe, and you can get an idea of the stocks in this list. They're very different. Some of them are in financial, some of them are in tech, some of them are way out there in retail, right? Now, the reason I have those stocks in the list is because they offer both of the criteria that I look at. They follow the market, they have liquidity, and they have good volatility. Now, some stocks go in the list, some stocks come out of the list. Now, I just told you why a stock might go in the list, but why would a stock come out of the list? Well, simply speaking, sometimes when a stock hits a different price range, either to the upside or to the downside, it trades differently. Sometimes a stock that's over $10 trades differently than a stock that was under $5. Sometimes a stock that hits 50 or 100 trades differently because now it's a growth stock, and that might be perceived as attracting different people that want to invest in that stock. So if it trades to a different price level and it starts to trade differently where I'm like, wow, I don't understand what's going on in this stock right now, even though I traded it before, I'll take it out of the list. Now, how do I know when to take it out of the list? I lose money. If I'm trading that stock and I start to lose money in it, I'm like, okay, I'm not going to fight it. I don't understand what's going on in this stock. I'll take it out, which also is a big lesson for everybody. Trading is not so much as just tell me the patterns and I'll make money. Stocks have personalities, and you want to find the stocks and the risk tolerance that matches you. Not all stocks have the same volatility. Now, if you're trading different stocks with different volatility, that means going into those stocks and planning how you get your position size in those stocks will be different. So we just gave you the top two tech stocks that I watch, which is Apple and AMD. Now we're going to go into a different list of stocks that I pretty much trade every week. These are real trades, not imaginary trades. I get that question all the time. Are you actually trading them? These stocks have a little bit more volatility and a little bit less liquidity. So that means that the difference between the bid and the ask spread is a little bit wider. So Apple might, let's go to AMD. Apple might have a bid, AMD stock might have a bid of 100 and an offer of 101 cent. So there's literally a 1 cent spread between the bid and the ask, where you can advertise to buy and where you can advertise to sell. You can get out pretty quickly. I'm going to give you the stocks now. Now, stocks like these, if we go into, let's say, Coin or PayPal or SQ, okay, so those three stocks, you can see how much SQ moved on Friday. Even just taking this bottom here, 80, 85 up to 88, a nice $3 move in the market, right? Those three stocks, SQ stock, PYPL stock, and coin stock, COIN stock, right? Those stocks move with a little bit more quickness they'll move $1 in a heartbeat, whereas AMD or Apple might take a couple of hours to move $1, quite frankly, where one of these other stocks can move pretty quickly. So if I know those stocks and they're a part of my daily rotation when I'm trading those tech stocks pretty much every day, what does that mean? That means that I need to work those stocks differently from an initial share size perspective. That's a big deal, right? Hold on, I really don't understand people at 7:30 in the morning have nothing else to do than spam a I don't get it. I don't know. Anyway, so that means that in coin, PYPL, and SQ, instead of me, and I'll just use round numbers, instead of me going in with 1,000 or 2,000 shares on my initial entry, I'll work those positions with lower share size, knowing that those stocks can fluctuate $1, $2, $3 before they actually make the move that I'm anticipating. So what that means is if I want 1,000 or 2,000 shares, just using as an example, I'll need to work my way into those positions and build up to that share size. So here's the big difference between those two. And I want to really bring this out in a bigger way. Okay. And let me just, I'm not sure if I can get rid of this dude here. Okay. So what that means is that my initial position size in this, very, very different than my initial position size in this, which is the speed at which they move. So what does that mean? What does that mean for me getting involved in those trades? Here's the two things. Apple and AMD, because of the extra liquidity in those tech stocks, I am better timing into those entries as opposed to SQ, PYPL, or coin. It's more important for me to have time in those trades because the size of the move. So you have two choices when you're trading and deciding what kind of trader you want to be or what kind of stocks you want to trade. Are you more concerned with perfect timing, which is very challenging, or time in the trade? So you want to write that down, timing or time in. And I will give you a little bit of a suggestion here because this is really important. It is easier to be in a trade longer than it is to find the perfect spot. I want you to write that down because it's an important trading tip that everybody needs to know. Sometimes we put way too much pressure on ourselves looking to get in. I need to get that exact spot and I'm going to get stopped out or get out at the right exact spot. Stop trying to catch the exact penny on the entry. Stop trying to catch the exact penny on the exit. It's more important to give time a chance to pay you than it is to get the exact spot, especially with all the trading algorithms in the market today. It can be very, very challenging where stocks are going to dance around. So just to recap what I just said on how I trade those tech stocks every day, and I'm going to give you the stocks again. So if we take a look at AMD and we take a look at Apple, these two stocks are the stocks where timing is a little bit easier. They're not going to fly dollars around at a time. It's easier to work that trade and time those entries a little bit better. These other three stocks, specifically looking at SQ, coin, and we're even going to put PayPal into that equation right now. These stocks are stocks that I want to be in longer because I need to work those positions. So I might be working those positions over an hour or a couple of days or whatever it happens to be because of that increase in volatility. So what I'd like to do now is challenge you when you're looking at your list of stocks. Number one, I just showed you the tech stocks that I'm trading every day. Those are absolutely a part of my rotation. Again, I also showed you the other list of stocks, which are these stocks here, which are in my daily universe. So you can see Tesla's in that universe, Roku's in that universe, Netflix is in the universe. So you can see that there's a pretty big diversity of stocks, including solar stocks. So what we just talked about is the sector specific. We didn't break it down to whether or not they were semiconductor stocks or solar stocks. Now you can take that a step further inside of technology. One of the hottest sectors, and no pun intended on that, has been solar stocks. So I'm going to give you another list of solar stocks. So if we go into the stock market power pyramid, and what we just talked about here was sector rotation and tech stocks, we're actually going to go one group higher now, and we're going to take a look at what are known as solar stocks. Now they're getting a big boost from Washington. The whole renewable energy part of the market right now is really seeing an amazing move in the market, where we're seeing a explosion to the upside over the last month or so. So now we're getting industry group specific and looking for those kinds of stocks that trade every day. Now, one of the biggest things that we hear is, well, ENPH, which is the leading stock that we've been watching. Let me just pull that up for you and go out to the daily charts here. ENPH. Some people are saying, well, it's a $300 stock. I can't necessarily trade ENPH. Now, that's okay. A lot of people don't have, maybe your trading account isn't big enough to trade a stock like that. That's perfectly okay. Absolutely perfectly okay. But you should still be watching the leading stock in the sector as your industry, your indicator stock. So in this group of stocks, technology, and then one layer higher, which are the solar stocks, ENPH is going to be the indicator stock. But we're going to go one layer below that. We're going to go down and we're going to go back up again. Which ETFs do I watch when I'm watching my technology stocks, those 5 tech stocks that I just gave you? So what I normally watch is obviously the QQQ, right? Obviously about QQQ. And right now QQQ is actually on a breakout. So this is the bigger NASDAQ 100. But then breaking that down a little bit deeper is the XLK, which you can see is a little bit more focused on technology. Now, one of the great questions we get is, how do I break this down a little bit further? How do I know if I'm watching those groups of stock? Let's say you're watching the QQQ ETF or you're watching the XLK as the sector proxy. So you want to get a feel for what the sector is doing. And then if the sector is obvious and you have that list of tech stocks, you're like, cool, I'm already prepared. The sector is obvious. Now I'm going to go to my individual stocks. We're going to break this down even further. Okay, so if we go over here and we go back to the list that we had before, you can see that we have the top stocks weighted in the QQQ, as well as the top stocks in the SPY and the Dow. But we're specifically talking over here now. If you've read William O'Neill's book, How to Make Money in Stocks, I believe he says, don't quote me exactly on this one, but somewhere near 58% or something like that. If you understand reading the market and you understand following the sectors, that's almost 60% of how much a stock moves. Now, that number could be slightly off. Let me know if I happen to, tell me in the quotes, in the comments, if that's off a little bit. But the bottom line is, when you could read the market and you're aware of the sector, your confidence level and your conviction in those stocks following through should be significantly higher. So now we're going to go over to the tech stocks, but more into the solar stocks. So we just talked about ENPH, which, by the way, I want to be clear about this. These are stocks that I'm watching and trading every day. So I want to give you an idea. These are stocks that I'm actually in. These aren't like made up ideas. These are stocks that I'm watching and my community's watching. And depending on how they're trading that day, if they're in play, we're on them. If they're not in play, then we're probably in our universe of stocks. So if we take a look at some of those stocks, and again, using ENPH as the indicator stock for those stocks, let's see. Okay, let's see. Franz is saying ETF to watch, Raise Global Sector ETF. Perfect. Thank you so much for that. I like that. Thank you for that, Franz. Really appreciate it. So ENPH is going to be the indicator stock. So again, this is the more, and I want to give you a little bit of detail on what indicator stock means. Indicator stock, that means as that big stock in that group moves, most of the group moves with you. So I'm going to take you all the way back to 2000 when I first started trading. April 17th of 2000. You can look it up. It was a Monday when I first started trading. We were mostly trading NASDAQ stocks at that point. The dot-com boom was just kind of ending at that point. But Cisco was the indicator stock for the entire market. Cisco stock would actually move even before the futures moved. That's how important it is to know an indicator stock. So when we're looking at the solar stocks, ENPH right now is the indicator stock. But some of the other stocks that we're trading in this group, so you can see we went from 300 down to 36, and you can see that they're following pretty strongly. And you can see, get a little bit bigger picture of this here. So we got Run, we have Nova, we also have SPWR. So these are pretty much the ones that are dominating in this group. Now, there's other parts of renewable energy that are actually in play right now, which are stuff that has to do with electric vehicles, and specifically electric vehicle charging stocks. Those stocks have been pretty strong recently as well. So again, I'm sure everybody knows the one up by Wall Street by Peter Lynch, where he says, go to the mall and look for companies that you know, and those are the kind of companies that you should be looking to invest in. So if we happen to be doing it a little bit differently right now, we're saying, okay, what part of the world is changing right now maybe not going to the mall, but what part of the world is changing right now? Electric vehicle charging. So that's not related to an individual car company like, let's say, Tesla stock, but all of those stocks need to recharge. So then you start to look a little bit at those stocks and you put those lists of stocks together. So these stocks tend to move in packs. Now, here's the big thing. One of the dominant questions that we get, especially from new members of our community, is now I understand what to look at. I have the roadmap. I'm not lost anymore, but how do I make more in our winning trades? And that is the secret that you're learning right now. When you build these lists of stocks, I'm just going to walk you over here again, which is over here. So you can see I have multiple lists, right? And let's say we go into basic materials, which is a group that we're going to be looking at today. So you can see how strong. Look at how many of these stocks were green today. So on Friday, excuse me. So you can see that they followed through on Friday and most of them had green candlesticks. So what that means is when you are prepared, and whether it's tech stocks, whether it's basic material stocks, whether it's industrial stocks, if you want to level up your trading game, and this only takes 10 minutes, trust me when I tell you this, if you want to level up your trading game, you need to put a whole bunch of the same stocks in a list. Now, here's the thing. Let's say you're buying whatever stock. Let's say it's Apple, even though Apple is the indicator stock over there, right? When all of those stocks are green at the same time, in the time frame that you're looking to make the trade, whether it's a day trade or a swing trade or an investment, however long you're looking at that, if it happens to be an investment, you can look at percentage change in those stocks over, let's say, the last 3 months as an example, right? When order flow is clear in that whole group of stocks, those are the moments where you have to get your hands off the keyboard and say, wow, it's really obvious and I need to make more now because the smart money is piling money into the whole group. Excuse me. So I want you to have a snapshot of this because it's very important. So if we take a look at the basic material stocks over here from Friday, you can see that they were all green. But if we break this down even a little bit deeper here, you can see the rotation that we're talking about here and how for Friday, for the last 21 days, for the last 5 days, these are the kind of things that we need to be prepared to notice. Now, it's not hard. All you need to do on a Saturday or 7 o'clock at night, whenever you're uninterrupted, pour that cup of coffee, and I'm going to take you to the next step now, which is all you need to do is build a list of stocks in the same group, or if you want to go a little bit wider, in the same sector, and put them into one watch list. So you might be specializing in real estate stocks or home builders, or you might be specializing in semiconductor stocks or the solar stocks, whatever that happens to be. I'm going to show you how to do that now as well. So we're going to go into the semiconductor stocks. So what you would do is you would take the list we're about to build, put them into a list together. And if you happen to buy one of those stocks, you want to just take a quick look at the whole group and say, does it look like a Christmas tree where it's red and green, red and green, red and green? You don't have the whole boat being lifted, all the boats being lifted at that point. But if they're all green and very green at that point, which is by percentage gain, those are the pockets of opportunity where those bigger wins, because you're spotting it and you're doing something about it by holding those trades, those bigger wins in those moments that you recognize it, pay for all those pain in the butt losses that we can't stand, all those paper cuts that really annoy the heck out of us. Learning to spot those opportunities when everything is, wow, the smart money's doing something obvious. Their attention is on these stocks. I happen to be trading one of those stocks. I have to hold on to it. So I'm going to challenge you now. What kind of stocks do you like to trade? What kind of companies do you like to watch? What do you like to invest in? I'm going to show you right now because we're going to do this in the semiconductor group. I'm going to break this down a little bit further. So we looked at the template, right? So I'm actually going to start this. If you happen to be using FinViz, you want to make sure you click on all over here. So we're going to click on technology, and you can see that 61 stocks meet the criteria. That is my minimum criteria. But we want to break this down a little bit further because right now, what we're looking at, technology is the bigger picture sector. We're going up the stock market power pyramid. So if we take a look at this one more time, what we're doing here is we're looking here, but now we're looking to go a little bit deeper and build a list of stock-specific ideas in the group. So when we go into the group, we're going to click over here on industry, and we're just going to go, not equipment, we're just going to go to semiconductors. So you can see that brought it down to 13 stocks. So these 13 stocks, so let's say for argument's sake, you want to trade NVIDIA. or you want to trade like I do, AMD every day, you would put all 13, and actually somebody mentioned MRVL before, I forgot who it was. If you're looking at MRVL, you want to put, let me actually, it looks like I'm in the way here. Let me move myself out of the picture there. You can get this list of stocks right here, right? So what I'm going to do is you could take a snapshot of that, however you want to do it. So you would take that list of 13 stocks, knowing you're going to trade, let's just say AMD or NVIDIA, right? You're going to take that whole list of 13 stocks and you're going to put them into a watch list. So what I mean by watch list is what we have over here. You're going to take a list, whatever software you happen to use, and you're going to create a list of stocks and you're going to name them semiconductor stocks, okay? Semiconductor stocks. So your job while you're trading the individual stock that you're looking at is your number one job is to say, are we in stop and go traffic or is it a wide open road? Stop and go traffic means that you see 5 of those stocks are red, 8 of them are green, and they're just kind of bouncing back and forth, right? So it's not perfect conditions. It's when you see the perfect conditions when they're all green. They're all green today. They're all green the last week. And I'm going to show you how to spot that a little bit quicker as well. Let's go back over here into FinViz. If you go over here to groups, you get a little bit of a better idea over time, over one day, over the last 5 traded days, and you get the idea. So you can see technology stocks here. So this is a pretty good way for you to be prepared to make more money in the stock market. Now, again, this is educational purposes. We're not trading together unless you happen to be in our community. It's the trade management part of it that's the different skill than finding good ideas. And I think a lot of people struggle with that is they think that chart reading is trading. Let's be clear on this right now. Chart reading is not trading. They are completely different skills. Spotting patterns and getting paid, 2 completely different skills. So what we're talking about today, we're not even talking about chart reading. We're talking about how to position yourself that when you start to read the order flow and read the tape in the stocks that you like to trade, you will now know whether or not you should go like this. And I say this in our community, belly up to the bar, there's something to do. Put your cell phone on mute, stop watching television, sit down and pay attention because X, Y, and Z is all doing the same thing and we need to pay attention to that. So hopefully today you got a good sneak peek on the tech stocks that I trade. Those are the top 5 tech stocks that I trade. But more importantly, you also saw that I build a separate universe from that. And that list of stocks I trade pretty much every day. And then I also have a list of stocks that you just took a sneak peek of before, where certain stocks meet my proprietary setups, and I trade those every day as well. So I always give myself a nice mix of the stocks I trade every day, as well as the stocks that have certain proprietary setups. But then all of that still rests on how is the market doing. So we kind of keep working our way up that stock market power pyramid. So again, just to give you a super clear idea of what this pyramid means, it's you want the foundation of the market on your side. If that's there, awesome. Your conviction level goes up. Then one level higher than that, boom, you got now 2 layers of conviction, 3 layers of conviction, and then you can have some conviction in your stock-specific idea. So hopefully you might want to watch this video more than one time. Take a look at the stocks that I happen to trade. Again, like I said, absolutely every week, maybe not necessarily every day, but absolutely every week. And learn to build your own list. And if you have some follow-up questions, absolutely leave a comment below. I'd love to hear from you. And you want to have a little bit more private conversation, hop into our Facebook group. You can also get that link below the video here as well. I'd love to see you in there. I think we have 3,200 people in the group right now. It's a really nice group of people in there. Again, have some other conversations outside of these YouTube videos. So thank you so much, everybody. I really want you to know how much I appreciate you being here. Click the link below the video. Get into our Facebook group. We're also going to have some live training in there soon as well. So leave a comment below. And if I did a good job today, do me a favor. Make sure you hit that subscribe button and give me a thumbs up to let me know you got some value out of today. Have an awesome day, everybody. I'll speak to you soon.